Hi, my name is Roy Reyes. Welcome to the channel. Today I'm going to talk about 5 lifetime investments that if you haven't done, you can start now and hold them for life. Now, 3 of these are pretty passive, and the other 2 require more involvement. So let's get started. The first one is going to be in high buy and hold ETFs. I do this one a lot myself. There are a lot of ETFs out there, and in a nutshell, an ETF represents many companies. It can be a few, it can be even 100 companies or hundreds of companies. For example, QQQ is the top 100 non-financial companies, the Nasdaq, and BOOO represents the S&P 500. This is Vanguard. And then there's many other ones. So there's some that are dedicated to aging demographics, others that are in different sectors. But the ones I'm fully invested in are QQQQ and BOO. I have the largest part of my portfolio on that. This video is for entertainment purposes only. I'm not telling you when to buy, hold, or sell any asset. Any transactions you make, you should consult with a financial expert. So before you do anything, you can go to Yahoo Finance and you can type in this case VOO. You can see the returns in the last 3 years, the last 1 year, and they've been pretty good. I recommend that you look at more than just a few years. And I put here, for example, if you invest in this in the last 5 years, you would get a 13.4% return, and in the last 10 years, 15% return. Now, keep in mind that it will have there are some drawbacks, like when COVID hit and other times that the stock market would lose about 30% of its value or more. In this case, VOO went down 35%, but then after that, it recovered. So do your due diligence, look at them, understand that there's a lot of noise sometimes in the stock market. If you look at the week to week, day to day, or month to month, there's noise. But if you look at it, zoom out and look at the years, then you'll see a different story. Now, one important thing is to you say when should I buy? Okay, the best way, and studies have shown that if you just keep buying, every month or every 2 weeks or whatever, whenever you have the money, every 3 months or every year, just I would recommend. That's what I do. Just buy because sometimes you're going to buy down here, sometimes you're going to buy at the top, sometimes you'll buy at the middle. Okay, so on average, you'll dollar cost average and that has proven to be the best strategy. Okay, so it's you can't time the market. Nobody can do it. You don't know when it's hard to say when it's at a peak and when it's at the lowest point. So the best option is to every that's what's showing here. On today you buy here, this whatever every 2 weeks or whatever, you sometimes you'll buy here, sometimes here. And like in this case, you'll buy a lower value, or in some case you'll buy something higher. But at the end of the day, it plays out to be better, to just cost averaging. Okay, so always buy. So the next one is buy company stocks. Now, company stocks, yes, I get a percentage of my portfolio, and if you follow my channel, I'll show you. I'll go through the process I do to know what is a good company, because there's companies that we know, like that, like Sears, that went out of business, were great companies at one point, and if you would have had your stock there, you would have lost. And there's many examples like that one. Okay, so the thing is, which stock do I use? So I like to see, and what has a moat, like Apple, right? Apple has their cell phones, and they can pretty much charge whatever they want with that. They have their operating systems, they have their watches, and they'll have a lot of neat gadgets and tools. So if you like Apple, then people are willing to pay whatever. Now, there's other companies like Nvidia, right? That also have a moat. They have all this AI, the graphics cards, and everything that they're doing around the data centers for AI. So they have a moat. It's hard to get into that market. It's hard to get into Apple's market. So I like to look for these companies that not easy to get into. Okay. So there's one thing, the intrinsic value. What is the value of that company? And that's what we want to pay. We don't want to pay more for a company than what it's worth. Okay. And that's something. There's many ways to find intrinsic values. You can check, you can put in the AI, what is intrinsic value for Apple, and it's going to give you like 3 or 4 different values, but you can see kind of an average which one it is. Now, if you follow my channel, I'll show you the way I do it. Now, you can also go into Yahoo Finance, and this is very important. So this is NVIDIA. You can type in any ticker here, but the key thing is there's a section where it shows earnings, revenue, and earnings. So you can see that the yellow is the earnings. So the earnings is going up. Okay, that's what you want to see, a company with earnings going up. Okay, and then what else? You see this revenue also going up. That is the most important thing. Okay, so year over year it's going up, and then you also have these projections. So here you can see also that this dot is what they said they're going to do, and the green one is what they actually did. Okay, so you can see that this one here in this case is pending. So hopefully it'll come up above what they were expecting. So again, they should be increasing their expectation for revenue. So this is an important factor. So when you buy a stock, make sure that that's happening. There's a lot of speculative stocks that you maybe don't want to get into. Just follow, don't follow somebody that says buy this stock because it's going to go to the moon. I wouldn't waste my money on that. I would make sure that I look at this 3 years return have been crazy. Okay. So the next one is real estate. Okay. Real estate is something that's harder to get into. Okay. There are some ETFs that are for real estate that you can buy, and these are the ETFs that go off and buy properties. Okay. And those are there and easy to buy, just like you buy stock. But real estate, if you can get into real estate, so it's a very good. It's made a lot of millionaires around the world. Real estate is one of those assets that you can buy with the bank money. So you have a lot of leverage. You can give 25%, and then the bank puts the rest. So you can get a leveraged property that can generate. So what happens? There's some depreciation shield, which is really good. So if you have a property, you own a property that you're renting out. Okay, you can depreciate it. So what happens? The IRS says that the property, the mortar, right, the roof, everything, it starts to get old. So you can depreciate that over amount of years. And this sometimes they change the amount of years. But in this case, it's 27.5 years. So let's say that you have a property that's worth $500,000. In this case, you divide it by 27.5 years, you can depreciate 18,180. So that means if you're renting the property, and you're making, let's say 36,000 on the property, then you can technically you can deduct 18,180 in depreciation. Okay. Now, of course, talk to your whoever does your taxes to make sure that this hasn't changed and what's the best option for you, because you might not want to depreciate it, because if you're thinking of selling the property in a few years, then there's no free lunch. Okay, that depreciation, you're gonna have to pay taxes on that. But if you're thinking of just holding it and giving it to your kids, then that's a different story. Okay, so let me show you this. This is so what happens? So if so here you have a property that's, in this case, is worth $500,000. Okay, and then let's say the asset grows to some value. You've held it for many years and it grew to $2 million. So what options do you have? You can sell the property and pay taxes on it. Okay, or you can get an equity loan on that property, or refinance it and get some cash out, and maybe have continue renting it. And with that cash, you can do pretty much whatever, because it's a loan. A loan doesn't trigger a tax event. Or you can just hold the property, and when you die, you give it with all the proper documentation. You give it to your children, or whoever you put on your will. And the good thing is that right now, at this moment, of course, again, this can change. Whoever inherits it at the new value. Okay, so not at the old value. Okay, which is a big advantage for people that have money. Okay, so this is there. This is a tool you can use, and but again, consult with your tax advisor. Okay, so what happens? This is the case that happened to a friend of mine. So if they had to move, they were going to buy another house. They needed about 100K to buy a new house, but the market was slow. They've had this house for like 7 years, so they could have sold it, but they weren't going to make as much money. So what are your options? So what happens? You're trapped in a down market. So what you can do, and this is what they did. They didn't choose to sell it, because if you hold it on for 2 or 3 more years, when the interest rates go down, then you can sell it for a better value. So what they did was, on your house you have some trapped money. Okay, so you can take out a loan from it. So they took out an equity loan for 100,000. Okay, and they took that loan out, and then they rented the property. So now your property, enough to rent it out, pay the expenses of the original loan and the equity loan and all the insurance and whatever maintenance they need. So they took that money and they gave it for a down payment to their new house, and they moved into the new house. Okay, and what happens? The nice thing is that the rent was paying everything for them. So the house that they had turned into a money machine, basically. And they were able to take that money out, not pay taxes because it was a loan, and they were able to go into the new house. So the plan is to wait a few years to see when the market turns around and sell it. Or one thing they can do is they can hold on to it for many years, and as the house prices goes up, they can do it again. They can take out another 100K and then go out and buy another house. Okay, so the rent pays for their expensive, and the great thing is it also reduces the principal. Okay, so you're renting to somebody that's paying all your expenses and reducing your principal. So your debt goes lower and lower. So again, you can wait for some years and do this again. So it's a cycle. A lot of people do this, They will never sell an asset. They will hold on to it. If you get an equity loan, now remember, if you to get an equity loan in your home, you have to live in your house. Okay. Again, the rules change year by year. So as I'm recording, you have to live in your house, get the equity loan, then you rent it out. You can't. You if you're renting out a house, you cannot. Typically they won't allow you to get an equity loan. Okay, you can refinance the whole thing to a lower interest rate, but not the equity loan, at least not at this moment. Another way to produce income is with dividends. I don't use this. Maybe sometime in the future I will. There's a lot of YouTube channels out there to talk about this. But the basics is that a company takes their money and they save up for emergencies, they all expenses, whatever, and then they give out dividends. And the companies like McDonald's, they would go out and pay a quarterly dividend. Now, a lot of these are small; they're like 3%, 4%, but at least it's good money. Now, there's one thing though. So the price of the stock, it might go up as well. Like in case of McDonald's, it does. But you have to be careful because some of these they give you a good dividend, but then you have what they call NAV erosion, meaning that the price of the stock slowly starts to reduce, and that's not good because you want the price to hold up. So there's some funds like this one here, SCHD. Okay, it gives out a dividend, and you have other ones. So again, there's a lot of YouTubers out there that talk about this. I don't do this. I'd rather take my money and just work with options. And again, if you follow with my channel, I'll explain that and buy stocks that grow in value. I'd rather take the growth on it, like stock like Nvidia and Microsoft and others. Okay, Google, that the percentage increase is a lot higher than what I would get in a fund. But there's a lot of YouTubers if you want to look at that. Another one is business ownership. Again, this is one that I don't talk about on my channel, but I think it's a good one because we all know, we all work for somebody, and it'd be nice to have. It's nice to have your own business. Now, it's not all rosy like this. Like like this is showing here. It's a lot of work. Now, the best way, if I would get into business, I don't know one right now, is I would, I would buy a business and that already exists. Maybe a boring business that's already been around for many years. There's channels. I recommend Cody Sanchez. He's really good at talking about buying businesses. So basically, you could buy $1 million business for 10% down with the Small Business Association. They would help you, get the loan, and you can find a business that's already producing, that's been there for many years, and you hopefully get some training with the current owners. So that has a tax benefit when you own a business. Okay, the good thing is that you have your expenses, all your expenses, and then whatever's left, you pay taxes on that. Versus your salary, right? You get taxed right at the start. So that's one advantage. And again, you can leverage with the bank's money or to buy a bigger business. There's a lot of boomers that are retiring, so there are a lot of websites that have listings for companies. I recommend that you spend the money and talk to somebody that's good at doing this, so that you just don't jump into anything. There's a lot of way to analyze these businesses and do the right thing. Okay, so to summarize, we have the 5 forms of investment. The first one was the ETFs, which is really easy to get into. You can start with $10, $100, just open a brokerage account. You can do it with ETFs like BOO or SPY or QQQ. The next one is similar, just with individual stocks, just you have to do more homework on it. Real estate is a little bit more involved. It takes longer time, longer capital. You can start with the first two, and once your portfolio grows, you can take a loan from that, or you can use that money to get into real estate. The fourth is dividends, which I don't do, but there's a lot of YouTube channels on that where you can learn more. And the last one is business, which I recommend to just buy a business. A lot of baby boomers retiring, where you can go ahead and buy the business from them. Sometimes they can do owner finance for that. So thanks for joining. Hopefully you like this so you can subscribe.